A very good afternoon to all my dear students. So we are really very sorry, students. There has been a delay of half an hour due to some technical glitch. So today maybe you won't be able to view my video, but the screen that I have shared that you will be able to view, right? So today we'll be starting with chapter number 5, which is audit of items of financial statements. And students, this is a really very important topic. The weightage of this chapter is really very high, so you cannot just leave this chapter or consider this chapter as a very generic chapter, as most of the time students always do, right? So we'll be spending 4 sessions on this chapter because the weightage is 12 to 20%, which is really very high, right? So I can see that Vidya Shri Vidya Sharde, these students are already there. So yes, the class has just started. Many of the students are asking that is there a delay? So due to technical glitch, there was a delay. So we'll be starting with audit of items of financial statements. And students, if you have to understand this chapter, just try to understand that this chapter is really very important from the view of your practical aspect of auditing as well as your examination point of view, right? Why practically? Because see, so far we have been studying about various audit procedures that the auditor has to perform, and now the time has come that in this chapter we understand and we learn that how actually the audit of various items of financial statement takes place, right? So what documents the auditor is going to check, what audit procedures the auditor has to perform, right? Further, see, the name is audit of items of financial statements. So in order to understand this chapter, you must be aware about the various accounting standards which are required in this chapter. Then your knowledge of Companies Act 2013. Then your understanding of disclosure requirements as per Schedule 3 to the Companies Act 2013. And then your knowledge of audit standards on auditing that we have already covered in our previous chapters. So if you are aware about all these things, this chapter will be very easy for you to prepare, right? And when I started this chapter, I told you that students have a perception of giving general answers to the questions that are asked in your examination for this chapter. Students, believe me, general answers won't fetch you good marks. So you need to be very specific. Suppose in this chapter, we'll be studying about share capital, right? Now, in share capital, if you are being asked about the securities premium, like if a company, you are given a situation that a company is there and the company has issued the shares at securities at a premium, then how to audit about the securities premium? So there you cannot write generic answers with respect to the share capital, right? So specific answers are required, and very easy chapter if you have a fair understanding of, as I've told you, Companies Act 2013, few provisions, right? Then your Schedule 3, your accounting standards, just few provisions which you have already covered in your respective subjects, and your standards on auditing that we have covered, right? So let us start with the very first topic of this chapter, which is the term assertion. And I have explained you this term a number of times earlier also, right? But since this entire chapter is based on the concept of term assertion, let us just revisit this chapter, right? So, as I always tell you that when you have to learn any definition, understand and learn any definition, divide it into 2 parts. And if you remember, and in fact, you guys tell me, I have asked you to divide the definition of assertion in how many parts? We have done this definition twice earlier. Quickly send in your replies. I'm waiting for your replies. Quickly send in your replies. Om Gupta, Vidya Sharde, please send in your replies. Other students also please reply. So the first part of the assertion deals with certain thing that is to be done by the management, and then the other part is with respect to the auditor. So representations by management, explicit or otherwise, that are embodied in the financial statement. So management is going to give certain representation, whether explicitly mentioned, right, or otherwise, that is implied, that are embodied in the financial statement. Embodied is that is included in the financial statement. So representation is the information that the management gives. See, we as auditors, we are going to examine the information that is provided by the management itself, right? So representations by management, explicit or otherwise, that are embodied in the financial statement. This is the one part. And the second part is, see, the information that the management will give, that information is only going that information will be used by the auditor, right? So as used by the auditor to consider different types of potential misstatements that may occur. And I always say that each and every term in a definition is important. So why potential? Because potential means likely, right? It may happen, right? And then that may, the term may here is really very, very important, right? So let us read the two parts of this definition together. So representations by management, explicit or otherwise, that are embodied in the financial statement as used by the auditor to consider different types of potential misstatements that may occur, right? Now, students, this paragraph is given in your module on page number. Let me just tell you, I'll not be able to share my module screen. So it is on page number 5.4, and it beautifully explains as to why we are discussing all these topics, or we are studying this chapter. See, it says that the auditor has to give his opinion on the financial statement as a whole. And this he cannot do unless and until he obtains or he examines each and every item of the financial statement. So as such, if you talk about the income statement, it presents what? The results of operation, right? If we talk about the balance sheet, it presents what? The financial position, right? And see, balance sheet means there are going to be a number of items: building, plant and furniture, your furniture and fixtures, plant and machinery, your debtors, loans. A number of things are going to appear. Same way on the liability side, same way with respect to the income statement. So unless and until auditor obtains the sufficient appropriate audit evidence with respect to each and every item, he cannot give his opinion on the financial statement as a whole. That is why I see it is written here that to formulate an offer, so I'm reading the sixth line, but to formulate an offer and opinion on the overall truth of these statements, he has first to inquire into the truth of many specific assertions, both expressed, implied, both positive and negative. If you remember, I told you in the last session also, about the various kind of assertion, that is expressed, implied, positive and negative. I hope you all are aware. Quickly send in your replies, because I have explained this to you in detail in the last session, in the last chapter, right? So assertion. Now, in order to simplify it, if you remember, I told you that when suppose you are conducting the audit of XYZ Limited and you have to examine the building. Now, vis-a-vis a situation that I asked you to examine the building, vis-a-vis a situation whereby I asked you that examine the existence of the building, or examine the valuation of the building, or the rights and obligations of the building. So in the second situation, things are going to be much simpler, much understandable to you, right? So the topic assertion, simplifies the process, the audit procedures for the auditor. For example, see, on your module page number 5.5, an example is given. So let's say a building of 50 lakhs is appearing in the financial statements of a company. Now, when that building of 50 lakhs is shown, then the management or the company wants to represent that this building actually exists. That is what existence assertion. The management want to assert that the company owns that building, that is the company is having the right over that building, right? That is what rights and obligation assertion. Obligation is with respect to the your liability side item, right? Then the management want to assert that the valuation is accurate, right? Which is what the valuation assertion. Then that 50 lakhs also represent that it consists of all the buildings whose carrying amount should come into the total amount of building that is appearing in the balance sheet. So that is what the completeness assertion, right? Cutoff means that the building that has been there, it basically pertains to the current year or the earlier years, and the effect is with respect to the current year. The building that will be purchased in the next year, that is not coming, right? A cumulative effect has been shown as on a particular date, right? And the presentation and disclosure, the classification, that is all appropriate. So these are the various assertions that the management give, right? Now we as auditor, we are going to check all these things only with respect to building, that is whether that building exists or not. How can we check that? Now comes your knowledge of the various procedures that we have already done. So existence can be checked by inspection of the building, that is physical examination of the asset. Completeness, so we can always ask the management to provide us with the schedule of the opening balances, the building that has been purchased, and the closing balances, right? Cutoff, again we can ask the management to provide with the various papers relating to, let's say any building has been purchased during the year, so you'll be able to see that okay, during the year it was purchased, and rest of the buildings, it existed as on the first day of the financial year, that is it existed as an opening balance. With respect to valuation, we can perform what? Recalculation of depreciation, right? Rights and obligation, again we can inspect the document, that is what? The title deed, right? And the presentation and disclosure, for this we require the understanding of Schedule 3 of the Companies Act, right? Then with respect to valuation, the knowledge of your accounting standards, right? So this is the way the auditor is going to check each and every assertion with respect to each and every items of the financial statement. I hope you are able to understand as to what we are going to study. The name of the chapter is what? Audit of items of financial statement, right? Now, this is with respect to the assertions that we have discussed. These are with respect to your asset side, right? Or the balance sheet, assets and liabilities. Now, with respect to the income statement captions, that is your revenue and expense balance. So here, student, let us take example of sales of 10 lakhs. So management wants to assert, and this is what auditor is also going to check. So let's say the sales figure is of 10 lakhs. So management is asserting that this sales occurred during the year and it related to the entity. Now here you will not say that this sale existed. You will say this sale occurred. Why? Because it is that has occurred during the year, right? Same way with respect to completeness, that is all sales figure is been shown in the financial in the P&L, right? Or your income statement. Cutoff is what? That the sales that has been shown, that pertains to the correct accounting period. That pertains to the correct accounting period, right? Then with respect to measurement, it is same as the valuation only, but here you will not say value, but for the balance sheet item, we use the term valuation. So measurement is what? The amount that has been coming is the sales that has been coming is what? Recorded properly, and the figures of sales that are appearing, that are not misstated, right? And then with respect to presentation and disclosure, so if I talk particularly about the sales, so sales from the products, from the services, any grants or donations, right? The operating revenues, whether these are separately shown, minus the excise duty, where is all this given? This is given in Schedule 3. So an understanding of Schedule 3 also, which is required. I hope it is clear. So Om Gupta, Swati, Vidya Sharde, students are saying yes, ma'am, it is clear. Right? So we have studied so far about the various assertions with respect to the income statement captions and your balance sheet captions, that is assets, liabilities, and the revenue expense. Right? Now, the first is item of the financial statement that is given in your module is share capital. Quickly send in a reply. If I ask you that you have to check about the existence, completeness, and valuation of the share capital, what all comes to your mind? Quickly send in your replies. Quickly send me the list of all the documents that comes to your mind. So, Swati, Vidya, Sharde, Om Gupta, please send in your replies. See, with respect to share capital, so if you just think logically that first of all, though, I'm going to check that whether there has been any change in the share capital. So I'll compare the period end share capital that is appearing on 30 as on 31st March. Let's say it is 2023, right? With the previous year, that is with respect to the closing balance of the previous year or the opening, right? So in order to see whether there has been any change in the share capital, right? If there is no change, see, we are giving an expert opinion on the financial statement. And if management tells that, okay, there is no change, so we cannot just, consider that as a sufficient appropriate audit evidence. So what will be our audit evidence here? We can obtain a written representation from the company secretary of the company that whether there has been no change. If there has been a change, then see if change has been there. So what will auditor check? The memorandum of association, that is whether it is within the limits of the authorized capital. And if there has been any issue of the share capital, then resolutions must have been passed. So the resolution of the board of directors and the shareholders, auditor is going to check, right? Now let's say there has been a fresh issue of share capital during the year, right? So auditor will check the provision of Companies Act 2013, like with respect to return of allotment, minimum subscription, whether that same has been received, minimum application money has been received, the amount has been kept in separate bank account, and the payment of underwriting commission as is required by section 14. So these are what your knowledge of Companies Act 2013 only, right? Same way, quickly tell me, can shares be issued at a discount, and what is the relevant section with respect to this? Do not look at the answer from the screen. Quickly send in your replies. So I can see Swati saying share certificate, we will check, register of members, we'll check, new allotments, we'll check. Om Gupta is saying we'll check balance sheet, right? So section 53 says that the shares cannot be issued at a discount. So if any fresh issue of shares has been there, then we will see whether the same is at discount or not. The provisions of section 53, whether these have been complied with or not, right? If the shares has been issued for cash or for consideration other than cash, for example, when these are issued to what? The promoters or the underwriters, right? Then when the shares are issued, whether the SEBI regulations and guidelines, whether these have been complied with or not, right? And just, step by step, think logically that various forms must have been filed. So when there has been any alteration of share capital, then whether the notice to registrar has been filed in form SF7. If the fresh shares has been issued, then return of allotment is to be filed with the registrar in the form of PAS3. If any foreign direct investment by non-resident shareholder is there, then the form FCGPR is to be filed with the RBI. So the auditor is going to verify that only. Further, auditor will verify the number of securities that has been issued along with the issue price. And in case of the issue of shares, students, the fees and the stamp duty must have been paid to the MCA. So auditor is going to verify that. So are you able to understand? This topic is so practical, and all your understanding of Companies Act, right? The related provisions with respect to your share capital issue. So those are the various provisions that are required here. Om Gupta is saying yes, ma'am. Section 53 with respect to discount. Yes, Om Gupta, you are absolutely correct. And otherwise, section 53 we will discuss. We will discuss just after one or two topics. Right. Right. So just have a look at the verification of share capital, the existence, completeness, and verification. So auditor will check the period end share capital, that is the authorized, issued, and paid up share capital with the corresponding figures of the previous year. Then if no change has been there, a written representation from company secretary, change has been there, whether it is within the limits of the authorized capital by examining what the memorandum of association. Resolution copies of the board of directors shareholders, and in case of fresh issue, then the various relevant provisions of the Companies Act, right? Shares should not have been issued at a discount, section 53. If shares are issued for cash or for consideration other than cash, then auditor is going to check that. Then SEBI regulation or the guidelines, whether the same has been followed, whether the various form SF7, PAS3, the form FCGPR, which is to be filed with the RBI. Then auditor is going to verify the securities issued and issue price and increase in share capital here. So the fees and stamp duty that is to be paid with the MCA. So these are the various provisions with respect to the share capital. Now, the next topic is shares issued at a premium. Now, this was a point that that I was discussing earlier, that you cannot here write these verification or these procedures, right? Why? Because if you get an answer specifically related to the issue of shares at a premium, then the provisions of section 52 of the Companies Act 2013, the auditor will have to see, right? Now, what is premium? The amount in excess of nominal value of the share, right? So what is the requirement? Section 52 says that the company is required to transfer the amount received as premium to securities premium account. So first of all, amount should be transferred, and then state the purpose. So what are the verification procedure the auditor will perform? He will see whether the premium received on shares has been transferred to securities premium account and whether it has been used only for the specific purpose. So these are the audit procedure the auditor is going to perform. Now your understanding of Companies Act, that section 52 says that the securities premium can be used only for these 5 purposes. Right? So I hope you are able to understand. Once you are clear with the relevant section of Companies Act 2013, thus you will see that we will be doing various disclosure requirements as given in Schedule 3. So if once you are clear with that, your understanding of accounting standards and a few and the understanding we have gained so far in till your chapter number 4 with respect to the audit procedure and the essays, then your this chapter will help you to get good marks. And I have told you that this chapter as such is having the maximum weightage, right? So section 52 says that the securities premium amount, it can be used for issue of fully paid up bonus shares, writing of preliminary expenses, writing of expenses, commission or your discount on issue of shares or debentures, providing from premium on redemption of preference shares or buyback of the shares as per section 68. So if these all the company has utilized the securities premium account for these all purposes, then it is fine, right? And auditor is going to verify whether that amount has been kept in a separate account and it has been used for the specific purpose. Is it clear? Is it clear? Now, the next topic is whether the shares, if a company has issued shares at a discount, then what are the audit procedures? So, are you able to understand? Practical based question, but your conceptual understanding, right? So, quickly send in your replies, whether whatever we have done so far, and I hope you are able to understand this. See, I'm assuming that maximum of your understanding with respect to this chapter is clear. I am taking these classes with you, these revisioning classes, more specifically for this chapter, in order to help you to learn, to understand as to how to learn this chapter and how to prepare for your exam. So I made these summaries. So you can make your summaries, and this chapter, if you see in your module, ample space is there on the left hand side. So you can just, using your own keywords or using the highlighters or whatever you want. So you can always make summaries like this. Okay? Is it clear? Now shares issued at a discount. So I saw that Om and other students have already replied that section 53 is the relevant section, and shares cannot be issued at a discount except for one or two situations. So first of all, the issue of shares at a discounted price is what? Void, right? So company cannot issue except for two situations, that is where the shares are issued as sweat equity shares in terms of section 54, and the shares can be issued at discount to the creditors when the debt is converted into shares under the debt restructuring scheme, and auditor will see whether the guidelines of RBI has been duly complied with or not with respect to these such conversion of shares, right? Of debt into shares, right? And if the company fails to comply with the above provision, then the company and every officer in default shall be liable to a penalty which may extend up to rupees 5 lakh or the amount raised, whichever is less, right? Plus, the company will be liable to refund all the monies received along with the interest at the rate of 12% from the date of such issue. Is it clear? Is it clear? So, Swati, I'll answer to your query. Just a minute. Let me just finish this topic. So, section 53 we were discussing, and we have seen that issue of shares at a discounted price is what? Void. Company cannot issue shares at discount except in case of issue of sweat equity shares as per section 54, and shares at a discount, that is where the shares are issued to the creditors under the debt restructuring scheme, where the debt is converted into shares, and the guidelines of RBI or the other regulations that need to be complied with. If the company fails to do that, company and the officer in default, he shall be liable to pay the penalty, which may extend up to 5 lakhs or the amount raised, whichever is less, plus the company is liable to refund all the monies at the rate of 12% per annum from the date of issue, right? Now, what the auditor is going to verify, he'll verify the movement in share capital, that whether there has been any change. And if yes, then he'll verify whether the same is at a discount. How? By reading the minutes of the meeting, right? And then he'll verify that if the shares has been issued to the creditors, then whether the regulations, whether the regulations have been complied with or not, right? Now, there is a doubt of Swati that, ma'am, how to present the answer in the exam. So let's say you get a 4-mark question with respect to a situation that you are conducting the audit of a company, and during the year you found that there has been an increase in the share capital, that is, a share capital has been issued at a discount, right? Under a scheme of conversion of the debt of the creditors into shares, right? So what procedures the auditor is going, you as an auditor, you are going to verify, right? So first of all, though, you will mention as to what are the relevant provisions of section 53, right? So you will mention all these provisions, right? And then you will mention that the auditor, so how will you mention? See, I have made summary here. So you will see that you will mention that auditor will verify or check the movement in the share capital during the year, and in order to see whether there has been any change, right? The auditor should verify whether the shares has been issued at a discount by reading the minutes of the meeting of the directors and the shareholder authorizing such issue of share capital, right? Further, auditor will verify. Now, this was the situation that has been given. So you will mention that auditor will verify that whether the regulations, RBI regulations have been complied with or not. So the relevant provision and the procedures that we are going to study, that you are going to mention. So Swati, is it clear to you? So students, if suppose you get a question and the question says that there has been a fresh issue of capital, and you just start writing all these procedures, that fresh issue of capital is there, we will write all this. But I always tell you that you need to read the question carefully. So if it is specifically mentioned that any debt of the creditors have been converted into shares, so that means section 53 is applicable. So the provisions of section 53 will come in that situation. Is it clear, Swati? Is your doubt clear? Swati is saying yes, ma'am. Now, section 54, which is with respect to the sweat equity shares. So basically, what are the sweat equity shares? So equity shares issued by company to the employees or the directors at a discount or for consideration other than cash for providing know-how or making available the intellectual property right or the value additions. Now, what all audit procedures the auditor is going to see with respect to issue of sweat equity shares. So the sweat equity shares are an exception to what's the issue of shares at a discount, because we have seen that as such the shares at discounted price are void, but the exception is what? Issue of sweat equity shares, right? Now, with respect to sweat equity shares, so suppose you get, again, let's say you get a 3-mark question with respect to sweat equity shares. So, you know the relevant section, and whenever students ask me that, ma'am, is it necessary to write a section? So, students, I always tell you that it is always better to write the correct section. So, if you are sure about the section number, the essay number, your other relevant accounting standard numbers, as in when we will see those accounting standards as in when we proceed. So if you're sure about those numbers, definitely you should write them. But please do not write the incorrect numbers, right? So section 54 is with respect to what? Issue of sweat equity shares, right? So first of all, auditor will verify that the sweat equity shares are of the class of shares that has already been issued, right? Plus whether the following conditions have been complied with. So what are the following conditions? So whether the special resolution has been, the issue of sweat equity shares is authorized by the special resolution passed by the company. The resolution should specify the number of shares, the current market price, the consideration, if any, the class of employees or directors to whom such equity shares has been issued. Clear? If the shares are listed, then whether the regulations of SEBI have been complied with. If these are not listed, then whether the rules as may be prescribed have been complied with. Right? And auditor will also see that the holders of the sweat equity share, they rank pari passu with the other equity shareholders. That is, the rights of the sweat equity shares are in equilibrium with that of the rights of the equity shareholders. So I hope it is clear. So students, are you able to get that? If you are getting any specific answers, so suppose you get a question that if you get specific questions like during the year you are conducting the audit of so and so company, and during the year there has been an issue of sweat equity shares. So what audit procedures you are going to perform? So first of all, mention the relevant provisions, and then auditor is going to verify this. Auditor is, let's say, auditor here is going to verify whether class of equity of shares is the same which has already been issued, whether special resolution authorizing the same has been passed, whether special resolution specify all these, whether these regulations has been complied with, and whether see the language that is used here is further the rights, limitations, restriction and provisions as applicable to equity shares shall be applicable to sweat equity share under this section, and the holders of such shares shall rank pari passu with the other equity shareholders. So auditor is going to examine that. So is it clear? So we have covered so far section 52, 53 and 54. Is it clear? Quickly send in your reply, Swati. Now are you able to understand as to how to present the answer in exam? And student, believe me, this is a 115 or 116 page chapter, right? Very lengthy chapter. So the first technique that you can follow is just summarize the chapter, because there is ample space on the left hand side of every page. So you can summarize in your own words the way I have done. Okay? So students, send in your reply whether you are able to understand as to how to prepare for your exam, because as I've told you that students have a tendency to leave this chapter. They think that writing general answers will get them good marks, which is not the case. Unless and until you write the specific answers. See, this is a professional examination, so a lot of hard work and knowledge is expected out of you. So general answers won't fetch you good marks, and this is a really very, very important chapter. You will see when practically you'll be conducting the audit now, you will see that these are the procedures, these are the documents that you are going to check. So from your examination point of view, as well as from your practical approach, this chapter is really very, very important, and in fact interesting also. The only thing is it is quite lengthy, but there is a solution to that also. What? That you can always summarize, right? So send in your replies. Are you able to understand? Swati is saying yes ma'am, I'm able to now understand as to how to present the answers. Om Gupta is saying yes ma'am. Others also, Vidya Sharda is saying yes. Others also, please reply. Now the next topic is reduction of capital. I'm not showing you the relevant section number. Please tell me the relevant section of Companies Act with respect to reduction of share capital. Send in your replies. Student, these are revisionary classes. So I'm assuming that once you have gone through these chapters. So Om Gupta is saying section 66. Others also, please reply. Others also, please reply. So reduction of share capital is contained, the relevant provisions are contained in section 66 of the Companies Act, right? So number of provisions are there. I've summarized them for you. See, what is reduction of share capital? This is basically when the company reduces its capital, let's say in the where there are accumulated business losses, or the assets are coming but their value is really very reduced or is doubtful, or there are any unsound investments that have been made and now they are not yielding any results, right? Or there has been any excess capital, so auditor may reduce its capital in terms of section 66. And the mode of such reduction of capital can be by way of reduction in unpaid capital, cancellation of lost capital, paying of excess of paid up capital. So reduction in unpaid capital, cancellation of lost capital, or paying of excess paid up capital, right? So section 66 of the Companies Act contains the provision with respect to the reduction of share capital. So whatever provisions are there, we as auditor, we will verify as to whether those provisions have been complied with. So auditor will see whether the special resolution has been passed or not, and whether the meeting has been properly convened whereby the special resolution was passed and the proposal was circularized in advance. Further, auditor will verify that the article of association authorizes such reduction of capital, right? Also, students, if there is any default in the repayment of deposits, then the reduction of capital cannot be made. So auditor will see that there should not be any default. So see how this has been written on in your module. We are discussing a topic which is given on page number 5.18. So the language, so Swati and others who were saying how to present. So see, these are the keywords. Now how to write. So if I talk about this point, just a minute, this point, right? So the language that has been used in the module is examine that there has been no default with respect to repayment of deposits accepted by the company or payment of interest on such deposits. Reduction of capital shall not be affected if such default exists. Shall not be affected means it cannot be carried out if there is such default, right? Further, auditor will examine the order of National Company Law Tribunal and he will verify the minutes of the meeting, and he will see whether both the documents have been filed with the registrar of companies. Once it has been filed, then he'll check what? The certificate from the registrar. He will check where all the accounting entries. So accounting entries will differ with respect to the mode by which the capital has been reduced. So he will check all the accounting entries and the disclosure requirements as required in Schedule 3 Part 1. Auditor will consider that. Further, in case of revaluation of assets, whether the same has been properly disclosed or not. Clear? Right? Then auditor will verify whether the adjustments have been made in the members register. That is, the old share certificate, they should have been altered, or the old will be cancelled and new certificates will be issued. Also, see, when the order of tribunal comes, then the word and reduced is to be mentioned, right? It is required by the order of tribunal. So auditor will see whether the word and reduced, if required by the order of tribunal, then whether that has been added or not. Whether whatever were the terms and conditions given by the order of tribunal, whether the same has been complied with or not. And the memorandum of association, whether the same has been suitably altered, right? And student, section 68 deals with buyback of shares. So there also there is what? Buyback of shares, but that will not be covered under reduction of share capital. Is it clear? Is it clear? Right? So, like what topics we have covered various topics with respect to existence, completion, and completeness, and valuation with respect to share capital. Then we discussed various specific topics related to securities premium, shares issued at securities premium, your shares issued at a discount, sweat equity share, and then section 66, that is with respect to reduction of share capital, right? Now, the next topic that we are going to cover is what? Disclosure requirements. That is given by Schedule 3, Part 1 to the Companies Act 2013. So students, I'll do one thing, that before starting with that topic, let us just take a quick break of 10 minutes here. And after the break, we'll be starting with the disclosure requirements, which are again really very, very important from the examination point of view. And thereafter, we'll be starting with reserves and surplus, right? So a break of 10 minutes here. So students, I hope you all are back after the break. So we have discussed the topic of share capital, and now we'll be starting with the discussion of disclosure requirements. Just a minute. So the disclosure requirements as are required by Schedule 3, Part 1 to the Companies Act with respect to share capital, right? So as I have already told you that these disclosure requirements are really very, very important. So the Schedule 3, Part 1 to the Companies Act 2013, it requires that the company, with respect to each class of share capital, which includes different classes of preference shares also, the company is going to disclose A, the number and amount of shares authorized. Then B says the number of shares issued, subscribed and fully paid, and subscribed and not fully paid. Then par value per share. And the D clause says that a reconciliation of the number of shares outstanding at the beginning and at the end of the reporting period. Simple. So number and amount of shares authorized, the number of shares issued, subscribed, fully paid, subscribed but not fully paid. Then your par value per share, a reconciliation of the number of shares outstanding at the beginning and at the end of the reporting period. Is it clear? Then the rights preferences, we are reading clause E. The rights, preferences, restrictions attaching to each class of shares, including restrictions on the distribution of dividends and the repayment of capital. So basically this says that with respect to each class of share, whatever are the rights, preferences, right? The restrictions that the company is going to mention. Now this F clause, it says that where the shares are being held by the holding company or the ultimate holding, or by the subsidiary associate of the holding or the ultimate holding, that shares are to be mentioned in aggregate. So let us read share. We are reading clause F. So shares in respect of each class in the company held by its holding company or its ultimate holding company, including shares held by or by subsidiaries or associate of holding company or the ultimate holding company in aggregate. Is it clear? Then G clause is again very important. It says that if the shares in the company are being held by shareholding by shareholders and they hold the shares of more than 5%, then such name should be mentioned along with the number of shares. So shares in the company held by each shareholder holding more than 5% shares, specifying the number of shares held. Clear? Then H clause says that if any shares are reserved for issue under options and contract commitment for sale of shares disinvestment, including the terms and amounts. Clause I says that, see, if on the balance sheet date, so we are on the balance sheet date, so 5 years immediately preceding such balance sheet date, if any shares has been issued for consideration other than cash, any shares have been issued by way of fully paid up bonus shares, or any shares have been brought back. So the number and the class of such shares will be mentioned, not only during the year, but 5 years immediately preceding the date at which the balance sheet is prepared. Right? So aggregate number and class of shares allotted as fully paid up pursuant to contracts without the payment being received in cash. Aggregate number and class of shares allotted as fully paid up by way of bonus shares, and aggregate number and class of shares bought back. Clear? For if any such thing has happened during the 5 years immediately preceding the date as at the which balance sheet is prepared. If any of the securities are convertible into equity preference shares along with the earliest date of such conversion in descending order starting from the farthest such date. So if suppose any of the debt is convertible into your equity, suppose any of your debentures are convertible into equity or preference shares. So starting from the farthest date to the nearest date, all the dates along with the securities which can be convertible into the equity or the preference shares. Then if any calls unpaid are there with respect to the calls unpaid by directors and officers, any forfeited shares amount originally paid up, and the M clause, which is really very, very important. So you may get a 3-mark question that with respect to the shareholding of promoters, what are the disclosure requirements or what the auditor is going to check. Or suppose you may get a question that you are conducting the audit of so and so company, and you have been asked by the engagement partner to check the disclosure requirements of Schedule 3 to the Companies Act with respect to shareholding of promoters. So there you need to make this table. So shares held by promoter at the end of the year and the percentage change during the year. So first of all, promoter here means the promoter defined in the Companies Act 2013. Details shall be given separately for each class of shares, and percentage shall be computed with respect to the number at the beginning of the year, or if issued during the year for the first time, then with respect to date of issue, right? So either the opening balance, and if it is issued during the year, then that date, right? Then what are details are to be given? The promoter name, number of shares, and what is the percentage of the total shares which they are holding, and the percentage change during the year. Really very, very important, shareholding of promoters. Okay. Further, with respect to any issue of securities that have been made, what is the specific purpose, right? That also will be indicated by way of note. So auditor is going to check that also, right? Is it clear? So these were your disclosure requirements as per Schedule 3, Part 1 to the Companies Act 2013, right? Students, this additional regulatory information which is given as notes in this chapter. So there you will see that various additional regulatory information has been given. So like this additional regulatory information pertains to what? Your securities premium and share cap and securities premium. So that is why it is mentioned here. And since if you can see, it refers to borrowed capital, borrowed funds also. So you will see this same topic where under the topic of borrowings also. So I'll be covering this topic there. But wherever the additional regulatory information relate, it is mentioned underneath that relevant topic. So we'll be doing that as in when it will come. This topic I'll be covering once we are done with your topic of what? Borrowings, right? So we have done what? Just a minute. We have covered our topic of share capital. Now let us do the topic of reserves and surplus. And now students, I'll help you to make summary the way I have made for share capital. So this topic we will see as to how to summarize. So quickly send in your replies. What according to you should be the verification step? So first of all, before you send me the replies, let us just see about the reserves and surplus. So what are reserves? Quickly send in your replies. Quickly send in your replies. Send in your replies. So see, reserves are the amounts that are appropriated out of profits and that are not intended to meet any liability. Simple. Is it simple? They are not intended to meet any liability, contingency, commitment, or diminution in the value, right? And how they will be used, it depends upon the nature. That is whether it is revenue or is it capital. So if these are revenue, these are available for distribution to shareholders or below purposes like to supplement the divisible profits in the lean years, to finance an extension of business, to augment the working capital of the business, or to generally strengthen the company's financial position, right? And what are capital reserve? So capital reserve represent a reserve which does not include any amount regarded as free for distribution. Is it clear? So example, your capital redemption reserve or your securities premium. Clear? So let me just have a look at the answers that you are sending me. Amount out of profits Om Gupta is saying accumulated and carried forward profits. Hima Bindu is saying, right? Now, just tell me, if you have to perform the audit procedures with respect to existence, completeness, and valuation, quickly send in your replies. What all audit procedures are you going to perform? Do not look at the module. Try to give your own answers. I'm waiting for your replies. Quickly send in your replies. So students, I can see a number of replies. So Om Gupta is saying amount of profits. Accumulated. Swati is saying any policies regarding transfer of profits to reserves. Then Om Gupta is saying resolution, verification, securities premium as per issue, usage of reserves. Right. Others also please reply. Just a minute. So see, with respect to the reserves and surplus again, you will check the opening balance. This is the very basic thing that we are going to check. So trace and tally. So we are on page number 5.25 of your module, right? So with respect to existence, completeness, and valuation, the auditor will trace and tally the opening balances of reserves and surplus and tally it with that of what previous year audited financial statement. Simple. Now with respect to utilization, two examples have been given in your module. First is with respect to profit and loss balance, and the second is with respect to your securities premium, right? So now with respect to profit and loss balance, again it says that trace the movement, right? So of the statement of profit and loss, and students, whenever there is a movement in the profit and loss account, then the same movement can also be traced from the statement of changes in equity. So auditor is going to consider that also. And whenever there is a dividend declaration, right, or any dividend has been paid out, then it will be out of profits. Then verify the resolutions with respect to such dividend also. Clear? And tell me, have you read AS4 or IND AS10? Quickly send in your replies. Quickly send in your replies. So AS4 or IND AS10 says that if any dividend has been declared after the date of the balance sheet, right, then the same need not to be shown as a liability, but yes, the disclosure is required, right? So the auditor will see whether the same has been disclosed or not, right? Now, with respect to securities premium, please, now you tell me that with respect to securities premium, what will be the points that the auditor is going to check? I'm waiting for your replies. So, with respect to securities premium, auditor will verify the resolutions of the board of directors or the shareholders, the transfer whether the same has been made as per the requirements of section 52, and the purpose for which the same should be same has been made, right? So let me just take you through the summary of this also. Capital and revenue reserve is given on page number 5.24, which we have done. Now, with respect to existence, completeness, and valuation, auditor will compare the opening balance with that of the previous year. He'll see whether any addition or utilization in the current year has been made. Then he'll trace the movement. If we talk about the P&L, he'll trace the movement with the statement of changes in equity. Dividend declaration, if the resolution has been passed of the board of directors shareholders, he'll verify that. And with respect to AS4, we have seen that if any dividend has been declared after the date of the balance sheet, then the same need not be shown as a liability, but yes, disclosure is required. Clear? Now, with respect to securities premium, I can see Swati Singh resolution check karna hai. Om Gupta Singh premium in excess of nominal amount. Yes. And what are the provisions? That is the requirements of section 52. That is whether the amount has been transferred to a separate account and the purpose for which it is mentioned there, whether the same has been used for that only. Right? Is it clear? Now let us do the disclosure requirements. So again, it says that whether the disclosure as per Schedule 3, Part 1 to the Companies Act have been complied with. So see this language, ensure whether the following disclosure requirements of Schedule 3, Part 1 to Companies Act 2013 have been complied with. So the reserves and surplus shall be classified as these. So just go through these: capital reserve, capital redemption reserve. Quickly go through these. Are you able to understand? So I hope you are able to understand as to what disclosures are given. These are very simple. And any surplus, that is balance in the statement of profit and loss, disclosing allocations and appropriations such as dividend and bonus shares. Any reserve which is specifically represented by the earmarked investment shall be termed as a fund. So it will be, if any investment is there, any reserve is there which is specifically which has been sidelined for some specific purpose, right? So that shall be termed as a fund. And the debit balance of P&L, that will come on the under the head surplus only, right? Even if it is negative, it is going to come under the head of surplus only with a negative, right? Is it clear? So it says that the debit balance of statement of profit and loss shall be shown as the negative figure under the head surplus. Is it clear? Same way with respect to your reserves and surplus, the same will be shown as reserves and surplus head only as a negative figure. So is it clear? So these are the disclosure requirement. And now students, here with respect to the reserves and surplus, so you may get a disclosure, you may get a question that what are the disclosure requirements, and 4-mark question can always come, right? So is there any doubt? Quickly send in your replies. Then we'll start with the next topic, which is your borrowings. Quickly send in your replies. Let me just open the next file. Just give me a minute. Meanwhile, you can send in your replies. Just give me a minute. So now let us start with the next topic, which is with respect to borrowings, right? Now tell me what all documents come to your mind. Suppose I ask you that you are going to you are verifying the financials of ABC Limited, and you have been asked by the engagement partner to verify the borrowings that are appearing on the liability side of the company's balance sheet. Tell me what all documents come to your mind. Quickly send in your replies. Quickly send in your replies. So Swati Singh, ma'am, loan authentication document. Mohammed Shoaib Singh, loan agreement. So then others also please reply. Other documents. I'm waiting for your replies. So loan, right? Acha, also tell me, is there any SA with respect to a particular audit procedure that you can perform while you are verifying the borrowings that has been done by the company? Any SA that we have already covered that comes to your mind? Yes, Swati Singh, ma'am, external confirmation, SA 505, which is absolutely correct. Accounting standard, send in your replies. So see, first of all, see whenever any borrowings are there. So first of all, it must have been approved in the board meeting. So auditor will consider the minutes of the board meeting for the approval of the new loan, whether the same is authorized or not. right? So for all those who ask me that, ma'am, how to write, see the language, we are on page number 5.28 of your module. So the language that is used in your module is review the board meetings for approval of new lending agreements, right? Then see the next point says significant debt commitments, whether the same have been approved by the board of directors. So it says that during review, ensure that new loan agreements or bond issuance were authorized. Ensure that significant debt commitments were approved by the board of directors. So significant debt commitments means what? Like your interest rate, your repayment schedule. So these should be approved by the board of directors. Is it clear? Then, in case any recorded loan, so when the auditor is verified, he'll see that the recorded loan that is recorded in the financial statement, it tallies with the loan agreements. Clear? The borrowing limits should not be exceeded. Auditor can obtain external confirmation in terms of SA 505, confirmation from the banks and the financial institutions. Since your leases and hire purchase are also kind of what? Your borrowings only. So auditor will consider what? The underlying contracts. In case of the debentures that has been issued, auditor will see what? The trust deed. Okay, you tell me with respect to debentures, what comes to your mind? So if you get a question that during the course of audit, you have been asked by your engagement partner to verify the debentures that were issued during the year. Do not look at the screen. Do not look at the module. Write your answers. Quickly send in your replies. So, with respect to debentures, tell me, so the trust deed, right? Then what are the terms of issuance, the dates of redemption, the borrowing restrictions, if any, right? Compliance with covenants is what? The terms of the agreements. So whether the same has been done or not, right? If any debt is retired, see, if you have taken a loan and any asset has been given as a security. So when the debt is retired, that is when the same is paid off, then there should be discharge which is received on the asset, right? Because earlier it was been given as a security and now the debt has retired, that means it has been fully paid off. So there should be a discharge received on that asset. So the language which is used is, so why I'm discussing about the language, because many of you have asked, ma'am, how to present. So it basically says when debt is retired, ensure that a discharge is received on asset securing the debt. Is it clear? Right? Now, if the auditor has to check the completeness, whether all the loans, all the borrowings that should come, whether they have been included in the financial statements or not, auditor will obtain a schedule of short-term and long-term borrowings from the management, and he will see the debt outstanding as at the period end of the previous year, that is the opening balance. Then whether any new debt has been renewed, any debt has been repaid, and this should tally with the closing balance. If auditor receives evidence that yes, additional debt has been received during the year, then again the minutes, contracts, SA 505, subsequent cash disbursements, right? Subsequent to, let's say, 31st March, if any cash disbursements are there, this will also show now that some debt existed, that then only some payment has been made, right? Trace the closing balance with the schedule of the closing balance schedule with the amount mentioned in the general ledger. Review subsequent transaction after period end to see the cutoff. See, if any of the debt has been received after the 31st March, then it will come in the next year. But let's say students, any debt was not mentioned in the financial statement as on 31st March. But later on, auditor finds that there are certain cash disbursements after 31st March. So auditor can see now that something fishy is there or some possibility of fraud is there. Why? Because cash has been paid subsequently, though the related debt has not been shown. That is why we are reading these terms, subsequent cash disbursements. Okay? Is it clear? Right? Now, how the direct confirmation procedures will be done? We all have done SA 505. Right? So basically, auditor will obtain the direct confirmation from the bankers or the financial institution with respect to all the borrowings. Ask all the information. If you remember, we have done under SA 505 that not only the amount, but the terms, so interest rate, the due date, any collateral, any security interest, right? So auditor will consider that. In case the replies are not received, reminders will be sent. And whatever is the confirmation information that is received, he will compare that with the same that is mentioned in the books. And in case of any difference, he'll ask for reconciliation and the supporting documents. Simple, very logical. Now, with respect to valuation of the borrowings, what will auditor see? He will see the accounting policies, determine that the accounting policies and the method of recording, whether these are appropriate and applied consistently. Any loan balance plus loan payable, he is going to check that with the loan agreement, right? He will recompute the interest or the discount or premium on retention or on redemption. So interest, basically, see, interest is what amortized. So he will see whether the same has been amortized as required by the accounting policies or the relevant standard. Then in case of any foreign currency loan, he will check the exchange rate as is required by AS 11. He will read the provision of the agreements, whether they are in compliance with the covenants is what? The terms of agreements. Whether any debt is to be classified as current or if any provision has been waived off. Let's say earlier the payment has to be done every month, but now this provision has been waived off by the lender and now the payment is done annually. So he will obtain what? Confirmation, right? Is it clear? He will see what are the due dates with respect to the long-term and short-term debts. With respect to long-term, the installments which are falling due within the next 12 months, whether the same has been disclosed properly and verify the correctness. Students, this part we are going to cover when we will be doing what? The disclosure requirements. In case of debt agreement, any restrictive covenant. Covenant is, as I told you, covenant is basically what? Your terms of agreement. So restrictive, for example, let's say if any debentures are issued and there is a condition that now for the next 5 years, no new loan can be taken by the company. So restrictive covenant. So if any such covenants are there, creation and registration of charge, auditor is going to see. Creation is when the loan is taken, right? And registration, the same will be registered with the ROC, right? And if the security falls below the outstanding amount, then the loan will be considered as secured only till the extent of the market value of such security. Quite logical. Any doubt till here? Then examine again the hire purchase agreement, the borrowings from related party. What is the relevant accounting standard with respect to related party? Your AS 18. Auditor is going to consider that. He will see the various disclosures of bill discounted, bill negotiated, and check discounted. Article of association and memorandum of association he'll see in order to see whether the same has been authorized or not, the borrowings. He will see the provisions with respect to section 180, section 185, and section 186 of the Companies Act. So tell me, what is section 180 all about? Quickly send in your replies. Section 180, quickly send in your replies. So this is basically restrictions on the powers of board of directors. Section 185 is related to loans to directors, and section 186 is related to loans and investment by company. So the auditor is going to consider whether the provisions have been complied with in as per section 180, 185 and 186. He will examine that the purpose for which the loan has been borrowed, whether it has been used for that purpose, and if the company has accepted any deposits, then whether the directives of the RBI have been complied with or not. Right? So see, students, if you just look at the entire borrowings ka valuation or thing, so you will see that these are just the practical points, right? But as I always tell you, that general answers won't fetch you good marks. Specific answers, see if you get direct confirmation procedures with respect to your borrowings, or let's say the valuation. So you will have to write these only, right? Now for the disclosure requirement, let us now move on to your module. Just a minute. Just a minute. Since today there is a technical glitch, just give me a minute. Just give me a minute. Let me just open the module. So let us just have a look at the disclosure requirements given on page number 5.32 with respect to the borrowings. Right? So quickly send in your reply whatever we have done so far, whether it is clear or not, so that I can proceed further. So we are starting with the disclosure requirements of borrowings given in your module page number 5.32. Meanwhile, send in your replies whether it is clear or not. So again, ensure whether the following disclosure as required under Schedule 3 Part 1 to the Companies Act are made for each amount disclosed under each of the following heads. Right? So if you can see that there is a bifurcation of what? Long-term borrowings. Then in bold, you can see other long-term borrowings. I'm unable to write, so just look at the screen. Then short-term borrowings. Is it clear? Just a minute. Just a minute. Just give me a minute. So just a minute. So long-term borrowings, right? So now with respect to long-term borrowings, auditor is going to see that the requirement of Schedule 3 Part 1 to the Companies Act, it has been disclosed the way it is required by Schedule 3 Part 1. So long-term borrowing shall be classified as bond debentures, term loan from banks from other parties, deferred payment liabilities, deposits, loans advances from related parties, long-term maturities of finance lease obligation. Students, you may not, get any descriptive type question with respect to if I talk about this disclosure requirement, because it is quite lengthy, right? You may not get. But what questions can be framed out of this? So you may get 4 options that which of the following is not included as a part of long-term borrowings, or which of the following is included. So there certain parts of your other liabilities will be mentioned, certain part of your long-term borrowings will be mentioned. So this way you may get the MCQs. The way you will see this point, I'll be discussing all these short-term borrowings. If you see, And here, point number 5 is really very, very important. Current maturities of long-term borrowing shall be disclosed separately here. So you may get MCQ that which all shall be included in long-term borrowings, and there can be one option, current maturities of long-term borrowings. Though it will be shown here under the head short-term borrowings. Okay? Are you able to understand as to how you may get the questions from these? Otherwise, you can get a 4-mark question as to what will be the disclosure requirement as per Schedule 3, Part 1 of the short-term borrowings. But MCQs, yes, tricky MCQs can come from here, right? So the way this F clause is important. Long-term maturities from finance lease obligation, right? Then other loans and advances. Then borrowing shall be classified as what? Secured and unsecured, and nature of security will be mentioned. And the third clause says that if any guarantee has been given by director or others, the aggregate of such loan amount under each head will be disclosed. Is it clear? Then in case of bonds and debentures, the maturity or the conversion of the same will be mentioned in the descending order, the way we did earlier, that starting from the farthest redemption or the conversion date in a descending order. Then if any bonds and debentures are redeemed, then the particulars of such redemption will be disclosed. Terms of repayment of terms loan and other loans shall be stated. Period and amount of any continuing default as on the balance sheet date and repayment of loans and interest shall be specified separately in each case. Simple. So this was with respect to your long-term borrowings. Now the next disclosure is other long-term borrowings, which basically means your trade payables and others. Then is short-term borrowings. So short-term borrowings mean loan repayable on demand from banks or from other parties. Loans and advances from related parties. See, the disclosure with respect to related parties separately required. So you may get a question. See, how can a question be framed here that there were short-term borrowings, and while conducting the audit, you found that the loans and advances from related party are shown under the head loans from other parties here, like loans repayable on demand. So that is not the correct disclosure as required by Schedule 3, right? Then again, and you will see that whatever we have seen for long-term borrowings, almost the same is there with respect to short-term borrowings. Borrowing shall further be classified as secured, unsecured. Nature of security shall be specified separately. Where loans have been guaranteed by directors or others, the aggregate amount of such loan under each head shall be disclosed. Period and amount of default as on balance sheet date in repayment of loans interest shall be specified. This clause is really very, very important. You can mark this 5th clause, and under the head long-term borrowings, the F clause, or this is sub-clause. So this F point, really very, very important. That under which head you may get that in the form of your MCQ. Okay? Right? Then, where the company has not used the borrowings from banks, financial institution for specific purpose, then for which it was taken as at the balance sheet date, the company shall disclose the details of where they have been used. Is it clear? So this was with respect to your borrowings, the disclosure requirements as required by Schedule 3, Part 1 of the Companies Act. Is it clear? Quickly send in your replies. Is the borrowings part also clear? So today we have done what? The existence, completeness, valuation of your share capital. Then we did Section 52, securities premium, Section 53, sweat equity shares. Section 53, issue of shares at discount. Section 54, sweat equity shares, and Section 66 relating to a reduction of share capital. And then the disclosure requirements and the notes I have asked you to leave with respect to share capital. Thereafter, we started with reserves and surplus. With respect to reserves and surplus, we have done the disclosure also. With respect to borrowings, we have done the disclosure. These notes I'm leaving as of now. In the next class, as and when other notes will come, I'll take all the notes together, right? So I told you that how the notes are given in your module, the relevant notes are given. So these notes are related to borrowing. So that is why they are mentioned under this topic. Okay. So I'll take these notes in the next session. Now let us start with the next topic, which is what? Trade receivable. And now one question for you, that if you are been asked to examine the trade receivables, quickly tell me. See, now your external confirmation procedure that we have done under SA505 in detail, that comes into picture, right? So quickly send in your replies. I'm waiting for your replies. Trade receivables. The additional regulatory information I'll take up in the next session. So Swati is saying we will see whether it actually occurred or not. Okay. Others also please reply. See, just try to imagine that what standards you can apply, right? What procedures, audit procedures you have done so far. So out of those, what audit procedures you can apply? See, let's consider a situation. So let me just first look at the answers that you are saying. Om Gupta Singh, bill receivable debtors, bad debt. Swati Singh, external confirmation procedure to test debtors. Swati Singh, SA 505. Mohammed Shoaib Singh, obtaining aging reports. Right. And tell me, see, trade receivable, let's say with respect to ABC and company, there are at least 40,000 trade receivable accounts. Tell me what, as an auditor, you are going to check first. Quickly send in your replies. I'm waiting for your replies. So what you are going to check? So comparison of previous year to current year to calculate debtor turnover ratio, that is correct. Tell me that there are, I told you, around 40,000 trade receivable accounts. So see, the trade receivable is affected by how the sales, your credit sales, are recorded. And with respect to sales, auditor will check the internal control. Why? Because we all know that checking of 100% of the transactions is not possible. So chances are there that if the credit sales are recorded in an correct or the appropriate way, the corresponding recording of the trade receivable is also correct, right? So auditor will perform test of controls over the sales transactions. So he will say that only so these are very general checking that the auditor is going to perform. Only the bona fide sales, that is the genuine sales. Bona fide is what? Genuine sales are recorded. And the credit sales are made to approved customers. See, it should not happen that the company is making sales to any XYZ. So it should be made, because I'm talking about what? Credit sales. So approved customers. Thus, transaction should be properly recorded. And once recorded, any credit sale, either or any sale, it should be either nullify by receipt of cash or the same should be written off. So it basically wants to mean that either the amount will be received or the same is been written off. Otherwise, the sales, the credit balance of that party will appear, right? Then there should be segregation of duty. The person who is recording the transaction, the person who is making the sales, dispatching the goods, the person who is looking at the receipt of the cash, all should be different. The amount should be received on time, and if no, reminder should be sent and legal action. So these are what? These are internal controls that have been put by the management. and that the auditor will perform test on control, right? The balances should be regularly reviewed, follow-up system should be there. If the provision is to be made or aging of schedule, whether the same has aging schedule, whether the same has been made or not. So basically these are what the various internal controls that will be, that the auditor will see whether the same has been maintained by the management or not, right? So this was with respect to the internal control over the sales. Now the various substantive procedures. So you all are aware now what are substantive procedures? The procedures that the auditor perform in order to detect any potential mistake, material misstatement at the assertion level in the financial statements. So these are what substantive procedure. So now if the auditor has to check about the existence of the trade receivable, that whether this trade receivable actually exists, what all procedures auditor can perform. See students, these are very general. So if you have to write general answers, now write these only. Why I'm repeating this? Because students have a tendency to write very general answers for this chapter, right? So try to use the language that has been used in your module. Try to use the keywords that are mentioned in your module. So now with respect to existence, auditor will perform audit procedure in order to ensure that the invoice is recorded only once. Right? Why? Because this will ensure that there are no fake trade receivables. One invoice has been recorded only once. Because if the system is such that there is no control over recording of invoices and one invoice is recorded twice or thrice, there is going to be an fake inflation in the sales figure, right? Receivable balance automatically get recorded. So whenever any credit sale is recorded, the corresponding debit side of the receivable, trade receivable, it automatically gets uploaded, right? Auditor will obtain aging report and trace the balance in report and compare it with the general ledger. So the aging report of all the debtors and then compare the balance that is appearing with that in the general ledger. And he will see that whenever the amount is received with respect to any of the debtors, then the same must be what? Invoice wise. So if different invoice with respect to, let's say, debtor A is there, and there are 4 invoices. So if he has made any payment, suppose, let's say, with respect to this invoice, with respect to this invoice, it should be like that. However, if it is not invoice wise, then it should be adjusted chronologically, date wise. That is first in, first out. And let's say if there is a, it cannot be, suppose, just a minute. Suppose the invoice were for 15K, all the invoice. So if it is specifically for invoice 1, 2, 3, 4, it will be allocated like that. If it is not like that and just 15K has been received, to chronologically, first in, first out, let's say it is the first invoice. So earliest invoice. According to the date, it should be on FIFO basis. Now let's say if 20,000 has been received, right? So here what auditor can do, he can obtain the confirmation from the debtors as to against which invoice the same has been done. In case of large balances which are due for a long time, ask for reasons and the justifications from the management, because chances are there that these debtors actually never existed, right? Further, the next procedure that the auditor may perform is what? Direct confirmation procedures. And now we'll quickly go through these procedures. Why? Because we have done SA505 in detail. So first of all, auditor will contact the customers directly. You all know what is the definition of external confirmation? Direct written response to the auditor. So contact the customers directly and ask them to confirm. So auditor may ask or send confirmation request to all significant account balances. So let's say there are, let's say 10,000 receivables. Out of this, 100 are above the materiality level, let's say 50,000. And the rest of the debtors, these pertain to very small amount like 5,000, 2,000, 3,000. So here auditor may select a sample and here auditor may send it to all the debtors. So all significant account balances, auditor will send confirmation, and with respect to smaller outstanding, he may select the trade receivables on sample basis. And students, this should be with the consent of the entity, and if the management refuses, whether the grounds are valid or not, auditor will see if the grounds are valid, then perform alternative procedures. If the grounds are not valid, determine the effect on the nature, timing, extent of alternate procedures and the reliance on written representation. So if management has given the written representation, see now if auditor finds that the grounds are not valid, auditor will see now that management has given invalid grounds, invalid reasons. So auditor's reliance on other written representations that management has given, that will also get impacted. Clear? Now auditor will see the balance sheet, the balances. He may ask the confirming party to confirm the balance as either on the balance sheet date or in case of any other date, but that should be close to the balance sheet date. And again, the form can be, if you remember, it can be blank, that without the balance, what is the balance, right? Or with the balance, that is whether or not the confirming party agrees. And which is more preferable? The second one. Simple. The method of selection of your trade receivable. See, it should not be revealed to the company until the trade receivable ledger has been handed over to the auditor. So, see, if the management is aware that auditor is going to send the confirmation request to all these trade receivable exceeding the amount of, let's say, our example, 50K. So chances are there now that they enter into transaction with, let's say, related party under such amount only 50K, right? So, sorry, what I want to say is that if the client is aware that the auditor always sends the positive confirmation request to, let's say, the debtors exceeding 50,000. So chances are there that the auditor, if they have to enter into any fraudulent transaction, they will enter into transaction with lower amounts. So that surprise element should always be there unless and until auditor gets the trade receivable ledger. The surprise, it should not be revealed to the company as to how they are going to select the trade receivable to whom the confirmation request will be given. So how this procedure actually works, basically, students, if you remember, we have done when we were discussing about external confirmation, there was a topic with respect to design of confirmation request, and there I told you that in fact the confirmation requests are sent on the management's letterhead. And there was a point under SF505 also that the management authorization also impact whether the confirming party is going to respond or not. So how the procedure takes place? So basically a list of trade receivable is selected, which is given to the entity for preparing the request letters. However, auditor, so they are going to prepare the request letter. However, auditor will maintain a strict control over the correctness, the proper dispatch, and whether the confirmation is received by the auditor, and also any undelivered letter. If you remember, we have seen that undelivered letter is also one of the non-response. Remember? So that also auditor is going to, the auditor should have a strict control over these three things, right? In case any discrepancy is there, that means that any difference is there with respect to the amount mentioned in the confirmation and the amount mentioned in the company's record, auditor will ask the company to investigate and reconcile. If no reply is received from the management, auditor will perform alternate procedure. Like, what can be alternate procedure? Let's say auditor has sent the confirmation request and no reply is received from the confirming party. So auditor will perform what? The alternate procedure. It can be what? Whether the cash has been received subsequently, and he'll perform detailed analysis. With respect to related party, where the trade receivable is a related party, he'll review the collectability, authorize whether the same is authorized, and the value should be reasonable at arm's length price. What is arm's length price? The price at which the same would have been given to an unrelated party, whether the price at which they have been given to related, whether these are same or not. Any amount other than sales should not be included in the sales figure. and auditor will perform various analytical review procedures. Quickly send in the relevant SA number. Let me just check your understanding and your learning of chapter number 4 till chapter number 4. Quickly tell me the relevant standard number with respect to analytical review procedure. Quickly send in a reply. Mohammed Shoaib is correct. Others also please reply. So it is. Others also please reply. Zahira, Swati, Om. So it is what? SA 520 analytical review procedures, like the trend line, right? Comparison over time, unusual trends. So let's say trade receivable. Otherwise, there has been an increase of 1% every year, but this year there has been an increase of, let's say, 4%. So make inquiries. So Mohammed Shoaib, Om Gupta, Swati, absolutely correct. It is SA 520, right? Now, with respect to completeness, so we are discussing the topic which is given on page number 5.41. With respect to completeness, so auditor will ensure that all sales are included. See, students, with respect to various assertions now, since earlier I was not able to share the screen of my module, I could not show you. So whenever there is any question that you may get with respect to completeness assertion, so the keyword is what? All, right? Whether all sales have been included or not, right? With respect to cutoff, it will be what? Correct accounting period, right? So you need to, pick up these keywords and make sure that you write these keywords in your exam. So if you get a question that with respect to the trade receivables, or you are required to perform audit procedure in order to check the completeness assertion. So you will see, so you will write that in order to ensure that all sales have been included and none of the sales have been overstated or understated, right? Auditor is going to perform all these. So what are these? So we have to check the completeness. So we will check the invoices during the last few days. See, if the company has an intention to manipulate, chances are there that near the end of the year and after the, let's say 10 days after the end of the year, manipulations are there. For example, if the company has to increase the sales, right? So chances are there that at the end of the year, like 1 week prior to the end of the year, fake sales are being shown, and thereafter, after the close of the year, they are being shown as sales return. So that is why, or it mentions that auditor will check invoices during the last few days, which are included in debtors, and goods should have been dispatched and it should not be lying with the companies. Your understanding of AS9, revenue recognition, right? Then all goods dispatched prior to period end. So if the goods have been dispatched prior to the period end, auditor will ensure that the same has been invoiced, that the same has been included in the debtors. And any of the goods which are dispatched after the period end, this is just the opposite. Then it should not be invoiced and it should be covered. It should not be included in the debtors under the period under audit. Why? Because the same are dispatched after the period end. Simple. And if any receivable report is there, auditor will select a few invoices, compare the same with the supporting documentation in order to see whether the same has been entered with correct amount, correct customer, and the correct date. So basically checking few trade receivables on a sample basis with the invoices and the supporting documents. Then see, when we are saying that the goods should have been dispatched, right? Auditor will match the invoices with the shipping or the dispatch log, and he'll check the invoice date and compare them with the shipment date in order to see that the sales have been recorded in the correct period, right? Auditor will assess bill and hold sales and examine the supporting documents. See, it might, so bill and hold is basically a situation whereby the billing has been done, but the goods are still lying with the client, right? So in such case, auditor is going to examine the supporting documents. Auditor will see the reviewing, he will review the receiving log, that is any inordinately large number of customer returns. I told you now that chances are there that in the last week before 31st March, fake sales are made, and thereafter immediately in the next week in April, the sales return are shown. So auditor will see large amount of customer returns are there or not. He'll review process of discounts and incentive. It should be as per company policy. It should not happen that related party ko some extra discounts have been given. He will review credit memos. So credit memo is issued. Again, let's say for any sales return or any discount, any memo has been issued. So whether the same has been properly authorized and it belongs to the correct period, and deduction in bill is there, check what are the reasons and the correspondence. Again, if any discount has been given to a particular customer, then what are the reasons and the correspondence. So this was with respect to the completeness assertion. Okay. Now with respect to the next, which is what? Valuation. Right? So here auditor will review the company's process to derive the allowance for doubtful debts, doubtful accounts. So provision for doubtful debts, valuation may provision for doubtful debts will be important. So whether the policy that the company is using, the process that the company is using, whether that is consistent with that of the last year, method is appropriate or not. Auditor will obtain aging report in order to see whether provision should have been made or not. Obtain a list of debtors under litigation and compare them with the previous year. See, if the debtor is existing since the last, let's say, 2-3 years, then why it has been shown as a debtor only, why it has not been written off as bad debt. He will scrutinize and identify the debtors which appear to be doubtful and ask management the reasons why provisions has not been made, and if dispute exists, auditor will perform further testing like checking the dispute agreement papers, like if any solicitor or any advocate has been hired, all that. Now with respect to the provision, so this is the last topic that I'll be taking. Just give me 5 minutes, then the disclosure will be left that I'll take up in the next session. So with respect to the provisions, so you may get a separate question that you are being asked to see whether the valuation assertion. So more specifically, you will be giving the answer with respect to provision also, whether the provisions that has been made for bad and doubtful debt, whether the rates are appropriate or not. So auditor will see the schedule of movement of bad debts, provisions and debts written off. Bad debt to sales ratio, current year may he'll calculate, compare it with that of the previous year, and see students if any write-off is there. If you remember, we saw that once a sales has been recorded, so it should be either when the payment has been received, it shall be cancelled when the payment has been received, or the same has been written off, right? So the same should be approved by the board of authorities. See, it should not happen that the payment has been received, it has been misused by any of the client, any of the staff, employees, and it has then been written off. So it should be by the appropriate authority of the board of directors, right? So this was with respect to the valuation with respect to the debtors. So students, see, this is the way you need to make the summary of this entire chapter, and this is not going to take much time. Just today, if I talk about today's topic, like we have covered till page number 5.43. We have left the additional disclosure requirement, regulatory requirement, that we will do in the next session. So if you just take today's session, just give good 45 to 50 minutes to this chapter, and on the left hand side of your module, see, let me just I'm unable to write, but if you just look, see, ample space is there on the left hand side. So you can make summaries in your own language, and if you feel that summaries won't help you or writing keywords won't help you, just mark the keywords on from the table that is given. But please do not leave this topic. This is really very simple, practical, based on your understanding of your law, of your accounts, and the standards and the audit procedures that we have done so far. So in totality, it is easy. But yes, going through the module once, twice, in order to understand as to how to present the answer is definitely required. So if you ask me that, ma'am, I have an understanding of accounts and law, I'll just write general answers. So I'll recommend that please go through the module and make summaries on the left hand side. You will be able to, at the time of your exams also now. So it is 120. If you look at the last page, that is 5.137, including all the questions. So it is a 137 page chapter. So if you just summarize it, you can summarize it in 15 to 20 pages maximum. And at the time of your exam and at the time of your revision, you can quickly just go through this chapter, right? So I hope, students, whatever we have done share capital, your section 52, 53, 54, 66, reserves and surplus, then your borrowings, and then we started with your trade receivables. Trade receivables ka disclosure is left, and other additional regulatory information is left. So I hope that is clear. So today our half an hour got wasted due to the technical glitch. So we'll try to cover up the rest of the chapter in the next 3 sessions that are allotted for this chapter, right? So thank you for being patient listeners, and thank you for waiting at the very beginning. So thank you and see you in the next session.